Today is Monday, September 11th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. Alan, let me start with this question this morning. What are the effects of Hurricanes Harvey and Irma on Fed policy?
Well, clearly it will slow the economy down to some degree. It also suggests that the Fed now has more of a reason to delay raising interest rates. So this is still in keeping with our belief that the Fed will not raise this year and that they will probably raise rates in the first or second quarters of 2018.
Last week, 3 Fed officials suggested that the Federal Open Market Committee might be slow to increase interest rates. Is that the main reason why the U.S. dollar slid to its lowest level since February of 2015?
It is a reason, but I don't think it's the main reason. I think what we are seeing is other central banks are withdrawing some of their easy money policies, especially the European Central Bank, who possibly at their October meeting may unveil a plan to scale back their quantitative easing. So basically interest rate differentials have turned against the US dollar this year, and they will continue to be a drag on the dollar index.
Steve, turning toward the grain market, what will the USDA say tomorrow? What are the corn, soybeans, soy meal, soy oil, and wheat charts saying ahead of the report? And could you also tell us what the fund position looks like before the report?
The market is expecting maybe USDA to drop the corn crop 120 million bushels and the bean crop maybe 50 million bushels. And then you see the corn and bean carryout maybe drop corn 100 million bushels, beans maybe 30, and wheat maybe 10 or 15 million bushels. So it's not a game changer. When you look at the charts, November beans is in the middle of a trading range between $9.20 and $10. So the report, if it's bearish, we could go down to the lower end of the level. And obviously, if it's bullish, it goes up to the $10 level. But I think at the $10 level, you could run into some farmers selling. As far as the corn is concerned, we're trading these corn around $3.58, $3.60. We're probably in a 20-cent range, close to the higher end of the range. It should be a negative report. I don't think they're going to lower the yield as much as the market thinks. The only thing is that the funds are short about 100,000 contracts of corn, which is a very sizable position, but they assume that prices are going to go lower into harvest. And as far as wheat is concerned, we're in a 420, 445 range. The USDA could raise world production as much as 9 million tons, 6 from Russia, 3 from the European market. And we could go out and maybe make new lows in the wheat market tomorrow. I think the main thing is that the USDA is not going to change anything as far as acres tomorrow. And they really don't have any harvest data until the October report. So if they don't do anything, the market might react negatively to that.
Steve, a Hurricane Irma question for you. How will the remnants of Irma impact U.S. Midwest weather?
Well, right now we're in a forecast where we're drier than normal, and temperatures are going to warm up a little bit. So the remnants of Irma in the next, at the end of the 2-week time frame, actually could put moisture across the Midwest, which is much needed. And I think it's too late to help the crops, but just might help things a little bit for next year. So she might add a little moisture in the Midwest. It's not forecasted normally.
From a demand standpoint, Steve, what is the USDA looking for in 2017 and 18? And could you comment on the ethanol demand and also the soybean crush demand?
Right now, they're estimating that corn exports are going to drop 400 million bushels due to the big Brazil crop. Beans, they've got them exporting maybe 75 million bushels more than this year, which would be a new record. China's going to take more beans, and there's expectations that maybe a normal crop in South America will add to the demand side of things. But right now, there's a lot of question as to maybe Brazil will add acres, and a normal crop could actually cut into our bean exports. And they're looking for about 100 million bushels less in wheat exports. Ethanol is flat. We're using 5.5 billion bushels of corn. We don't think that anything is going to happen in Washington to help the chances for E12 or anything like that. And as far as the crush is concerned, right now we're looking for about a 50 million bushel increase in the crush. But if the meal demand doesn't pick up, that may not happen. And so with all the stuff that's going on in soybean oil, with the anti-dumping things, you could actually see soybean oil stocks drop. So when we look at the charts, soybean oil right now is trading at about 35 cents a pound. It could go to 39 cents a pound if the crush doesn't go up. While meal is trading at $300 a ton, it could go lower.
Regarding South American weather, anything of concern there? Is it too early to tell?
It's too wet in Argentina and too dry in parts of Brazil, especially in the northern areas. Our weather guy looks for a normal seasonal pattern throughout most of their growing season, so that could be negative to prices if they see normal weather.
Alan, turning toward the precious metals markets, gold futures advanced to a one-year high on Friday and is close to that 1375 chart objective. What is the price outlook for gold futures currently?
Well, first of all, we are seeing a little pressure today because there is some flight to quality longs being liquidated with apparently somewhat of an easing of tensions on the Korean Peninsula. So I think this is a very good buying opportunity with gold down today after making those annual highs late last week. 1375 is still our chart objective, and I would not think that that is any type of an area that will halt the bull market. It's just a temporary resistance. So our first stopping point, 1375. After that, I see the trend continuing all this year to the upside and well into next year. So buy every break in the gold market. There's a lot left to the upside.
See, finally, I have a very important question for you. The Bears had a good chance to win yesterday with first and goal from the 5-yard line, about 30 seconds left in the game. Should the Bears fire their head coach after yesterday's late loss?
Just one person's opinion, but I thought the play calling was bad, so yes, I would fire it.
Well, hopefully a better week next week for the Chicago Bears. Anyway, remember the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.